Boris Schlossberg, Managing Director at BK Asset Management.
BK Asset Management's Kathy Lien.
Hello. Good morning, everyone. This is Kathy. I first like to start off with a sound check, mic check. Let me know that you can see my screen, hear my voice. Everything is coming through well because I have so much to share with you all today. So please say hello. Let me know that you can hear me loud and clear. Thank you, James. And thank you, Fernando. Okay, so we have so much to talk about, but I always like to start by, getting a sense of what you guys are trading and, what, instruments you want to hear more about. Of course, the big events this week are going to affect all of the instruments, but let me know if you're trading forex, gold, indices. Type that into the box. Let me know where you're coming from. I know that we have a lot of people who usually come from Europe, Australia, the U.S. There's just so much going on. And okay, a lot of you are trading gold, and I definitely have some things to say about gold, which many of you are wondering, can gold continue to rise? We'll talk about that, and we'll talk about all of the big events that are happening this week. Okay, so there is all right, gold, forex, futures, great. Euro, yen pairs, fantastic. All right. So let's go ahead and dive into this. First, I'm going to talk about the U.S. election. I'm going to share, a couple of charts. And then, we'll look at the heat map. We'll talk about, the events on the calendar beyond the election. Then we'll look at charts. I have so much to share this morning. And after I talk, Boris is going to roll into live trading the New York Open. So it's going to be a very exciting, lively session. And, of course, it all starts off with the U.S. election. So what do the numbers tell us? Let me just fix my screen real quick so you can see everything. Just give me a second. So what do the numbers tell us? Of course, the biggest event this week is going to be the U.S. election. And as we head into the election, there's a couple things that I think is important to talk about. First and foremost, today we see a broad-based decline in the U.S. dollar. The greenback is lower across the board against all of the major currencies. A large part of that is because U.S. Treasury yields are down. U.S. Treasury yields are down more than 2%. And, this is after U.S. Treasury yields basically jumping to its highest level since July on Friday, after the non-farm payrolls report. And I'll talk a little bit about NFPs later, but this morning we're seeing a pullback in U.S. Treasury yields. We're seeing a pullback in the U.S. dollar, and the pullback in Treasury yields and the pullback in the U.S. dollar, I think, clearly reflects the uncertainty in the markets. But if you joined me in prior sessions, you will know that when it comes to trading the U.S. dollar, hands down, the most important driver of U.S. dollar flows is Treasury yields. So it should be no surprise that with Treasury yields dropping 2% this morning on a 10-year yield basis, that the U.S. dollar is down across the board. But aside from that, stock futures are basically flat, and gold is basically flat. Gold hit a fresh record high last week, pulled back, and is pretty much unchanged this morning. The only other big move we have is in oil. Oil is up almost 3%. It was up 3% at some point this morning. Oil is up almost 3% again, and that's because of Iran's threat of retaliation, and also because of OPEC basically deciding that they're going to postpone their decision on production increases. So that has driven oil prices higher, and the Canadian dollar is trading higher, although it's not trading higher. It's not really one of the best performers. And the best performer this morning is hands down the euro. So the euro is so strong, and we'll talk about the reasons why later. But in many ways, none of that price action, none of that matters until we get the outcome of the U.S. election, because the outlook for a lot of the major currencies, for gold, for equity indices, all hinges on the U.S. election. So what do the numbers say? Well, it's basically down to the wire. It's a very, very close call. And this morning, part of the reason why we are seeing such a pullback in the dollar, as well as a drop in U.S. yields, is because it seems that, one of the battleground states, which is not listed here, the battleground states are basically Wisconsin, Michigan, Pennsylvania primarily, North Carolina, Georgia, Arizona, and Nevada. That is really what everyone is focusing on. But, this morning or overnight, it seems like Iowa, which, is normally a red state, it seems like there are reports that Harris is leading in Iowa. And, the markets are selling dollars as a result of that. And I think, this dovetails into probably one of the most important questions, which is, who is better for the dollar? Who's better for the markets? Is it going to be, and what are the implications for the markets based upon a Harris or Trump victory? Well, first and foremost, regardless of who wins, it is widely believed that there will be more debt because they're going to basically, announce measures to encourage and to promote growth and to prevent, any sort of sharp slowdown in the economy. And so if there is more debt, that means that there will probably be a need for more treasury issuance. And if there is more treasury issuance, generally speaking, people see this as inflationary. And if you have, more debt, which leads to more treasury issuance, which leads to the possibility of inflation not falling as much as the Federal Reserve wants, that is ultimately seen as positive for the dollar, or at least curtailing the Federal Reserve's more aggressive easing cycle. But more specific, that's more of a long-term thing. And if we think about how both of them will lead to more debt and greater treasury issuance, that is something that is more, I guess, something we'll look at 3 to 6 months down the line. In the near term, there's one very important implication for a Trump versus Harris victory. And part of the reason why the dollar is down today, because if you think, Trump favors a weaker dollar. So if Trump favors a weaker dollar, then why is the dollar falling this morning if Harris is in the lead in Iowa? And the reason for that is because while Trump says that he favors a weaker dollar, there are a few things that we are assured with when it comes to a Trump victory. And that's going to be, number one, tariffs. There's going to be harsh tariffs on the auto sector, harsh tariffs on various parts of the things that are being sold to the U.S. And ultimately, there's going to be significant protectionism. So protectionism and tariffs are basically positive for the dollar, right? Because it keeps money here and it basically hurts other countries. Whereas if there's a Harris victory basically represents continuity. So when we look at the markets in general, when we have if we have a Harris victory, the reason why it's negative for the dollar is because it's seen as a relief for especially those countries that rely a lot on car production and car exports. So if there's a Harris victory, it's a relief for the euro, a relief for the yen, because it means that you're not going to have those Trump tariffs hitting those countries. And that is why euro is the best. Well, I wouldn't say yen is the best performing currency this morning, followed by the Swiss franc and the euro. Those are the three best performing currencies because of the fact that if Harris wins, it's going to be a relief for those currencies. On the flip side, if Trump wins the election, it's going to mean uncertainty for those countries. The clearest thing is his campaign for tariffs. And so there'll be a lot of anxiety, a lot of nervousness in the Eurozone, in Germany in particular, and in Japan. So if there's a clear victory by Trump, the currencies, that will probably be punished the most will probably be the euro as well as the yen. But other currencies, will probably move in the same direction as well. You can't ignore the fact that they're probably all going to move in the same direction because they're going to be driven by the dollar. But it helps you understand why, for example, the euro and yen are some of the two of the best performing currencies this morning, because it's more of a relief in the markets. Now, speaking of gold, in many ways, it's the same, right? Because if we have a Trump victory, that introduces uncertainty. And that uncertainty could be positive for gold. If we have a Harris victory, that could potentially represent continuity, which would probably be negative for gold. Now, we've been through a Trump presidency already. So the reaction to a Trump victory this time around will be more muted than last time around, because the market kind of realizes it may not be as disastrous as they fear it could be. So the market reaction to a resounding Trump victory will probably be less than what we had in 2016. Now, this is, of course, if we have a clear victor, right? The easiest scenario for the markets, regardless of the volatility that would come out of it, is if you have a resounding victory for Trump or a resounding victory for Harris. Unfortunately, it doesn't seem like that's going to be the case. Unfortunately, it seems like it's going to be down to the wire, and it's probably going to be contested. It's probably going to drag out. Come Tuesday evening or Wednesday morning, for those of you that wake up, there's a very, very good chance that there's going to be no clear winner. And if there's no clear winner, that is probably the worst case scenario, I think, for the markets, because it just means that it's going to be uncertainty. It means that it's going to be drawn out. It means that the markets will be waiting with bated breath. So what does that mean for us as traders? What that means for us as traders is that, first off, what you're looking at is the next few charts. My arrow points to the election night, basically, or election day in the U.S. And this is a chart of the S&P. And if you look very, very closely, my candle points to election day last year. And you can see that S&P candle is huge, much larger than usual. Now with S&P, it closed green. There was volatility, but it seems like a pretty strong, clear, positive close that day. And what I also want you to notice is that aside from, number one, the volatility in that candle that I'm pointing to, and number two, a clear green close, I also want to highlight the fact that there's a very strong trend that emerges in the days and weeks to follow. There's a very strong trend that emerges, that continues, and that there's no ambiguity in the trend. The next thing you're looking at is gold. So same story. Candle points to election night, and you can see that candle is a good size, but it's not a huge candle. But that's the candle election night. You have some initial up down volatility, but by the end of the week, the market figures out the reaction that it wants to have, and once again, there's quite a bit of movement, at least there from 1880 down to 1770. So you have at least 2 to 3 weeks. 3 weeks, it looks like, of continuation in gold. And the next chart shows you euro. Same story. Election, we have a huge movement on election night or election day, followed by some decent sized movements in the days that follow. But once again, similar to the S&P, what I want to point out to you is there's a huge candle election day and a nice trend that emerges afterwards. And the last chart I want to show you is dollar yen. Same story, huge candle election day. Next few days is a lot of volatility. By that time, the dust settles and the market figures out what it wants to do. So as traders, what does this tell us? It tells us that as tempting as it may be to trade election night, the best decision that you can make, because these candles are huge, which means that it's whipsaw volatility. It's just going to whipsaw on every outcome for each state throughout the night. So you don't want to be exposed, in my opinion, to that type of volatility. It is much better to kind of hang tight, wait and see, how the candle closes. Wait and see what the outcome is, because chances are, especially in S&P, especially in Eurodollar, that that move that manifests itself will have continuation and last for days, weeks at a time. So you'll have plenty of opportunity to ride that move. You do not need to be in that very first, you do not need to be trading election night, in my opinion. Wait for the dust to settle, because if you're trading election night, you're going to have a lot of whipsaw volatility. At the end of the day, the markets are nonpartisan. You can see that with a Democratic president or Republican president, the returns in the markets on the annual basis are pretty much the same. The market really, at the end of the day, does not care, the S&P, if it's a Republican or a Democratic president. If you had only invested during Democratic administrations or only invested during Republican administrations, you would have underperformed significantly versus being invested, period, fully invested, period. So you should not invest based upon your political views, because at the end of the day, the market doesn't care. And, it especially doesn't care whether, it also doesn't care whether the incumbent party wins or loses. But there are a couple of things I do want you to pay attention to, which is 1 month prior, with the incumbent winning, the stocks tend to be doing better. With the incumbent losing, stocks tend to be doing worse. But 1 day after, on an average basis, stocks tend to sell off regardless of who's the winner. So that's maybe something important to pay attention to and keep in mind for the first 24 hours of trade. If you really want to jump in, stocks usually sell off regardless of whether it's an incumbent winner, which means the same party stays, or the incumbent loses. 1 month after, it tends to be that the market is optimistic about, the new leader, and stocks tend to outperform, and then they kind of basically even out. The other thing that I want to point out, this is volatility around presidential elections and years. 1 month prior to elections, volatility is high, regardless of whether it's a presidential year. 1 month before the election in general, it's high. But 1 month after the election and the months that follow, volatility tends to subside. So while last month, both have been, more volatile. 1 month after the election, you can expect that in December, volatility will start to subside as the market kind of comes to terms with who's going to be the next president. In terms of how assets perform during elections, you can see that generally speaking, an election year is good for the dollar. 2016 was when President Trump had won, and even though he favors a weaker dollar, you can notice that year it actually ended up being positive for the dollar. But at the end of the day, election years are good for the dollar, and the dollar has, for the most part, done fairly well this year. It's been, a decent year for the dollar, particularly against the Japanese yen, even though it's kind of unchanged in general. So what's interesting is that the dollar is kind of unchanged right now. So, maybe it has scope, to rally for the rest of the year, given on a seasonal basis, it tends to perform well in the election year. But I think it's taken for a grain of salt because, I think each year has its own factors. But it does show you election years tend to be positive for the dollar, negative for euro dollar, and more recently positive for gold. And it really doesn't matter whether it's a Republican or Democratic victory. What really matters is the economy and how the economy is doing, and whether, what monetary policy is like, because the U.S. economy doesn't really change significantly, and the outlook for the economy and how it's going really doesn't change significantly based upon a Democratic or Republican victory. Neither party is really going to be fiscally responsible. All the expert economists seem to agree that the one thing that we're going to get, regardless of a Harris or a Trump victory, is we're going to get more spending, more debt, greater treasury issuance. That will probably lead to more inflation and prevent the Federal Reserve from cutting interest rates significantly, which is kind of more positive for the dollar than negative. And that at the end of the day, what's really the most important is monetary policy. And as Danny Noonan of Morningstar wrote, the stock market goes up and down every year, regardless of the president, but the path of least resistance is always higher. So that leads us to ask, how is the economy doing? For the most part, the labor market is still near max employment. Some people were confused as to why on Friday the dollar rallied after the non-farm payrolls report. And, non-farm payrolls report was horrid, 12,000, much weaker than expected. And the reason for that is because a large part of that was due to distortion from the strike as well as the storms. And so they're expecting a huge snapback in the next report, and that they believe the labor market isn't doing as terribly as, the headline NFP numbers suggest. Prices are coming down, but they're still relatively high. And retail sales should be weakening, but really isn't. And so the economy, for the most part, is doing okay. And as a result, monetary policy is what matters the most. And monetary policy is really the focus, as well as the election, because we do have a Federal Reserve rate decision this week. And in terms of monetary policy, the market for this Fed meeting is pricing in a 100% chance, a 98% chance of a 25 basis point rate cut. There's a 2% chance that we may actually have rates remaining unchanged at 4.75%, 5%. But I think that's, wishful thinking. I think that the market's priced in 25 basis point rate cut, and that's probably what we're going to get. Now, when it comes to the Fed, in no way, shape, or form do I think Powell is going to say anything about the election. And in no way, shape, or form do I really believe that the election results is going to affect his decision on 25 versus 50. Because at the end of the day, the Fed has clearly told us, and their job is to be data dependent. And so they're going to watch the data. They're going to try to figure out, what is the data telling us? And so far the data, hasn't been terrible. The data has been telling us that, we think the U.S. economy is going to be doing okay right now, and that 25 basis points is more likely than no change or 50 basis points. The last chart that I want to share with you right now is the chart on gold. So gold is hovering near record highs. And so gold is hovering near record highs. And what you're looking at right now is the blue line is the Fed fund futures. The gold line is gold. And the arrow points to when the Federal Reserve starts cutting interest rates in a cycle. And you can see, if you look at the first arrow, that when the Federal Reserve starts to cut interest rates, that corresponds with a rally in gold. And the second time, same story. Second time, actually, gold was already at a record high. So gold's already at a record high at where the second arrow is pointing, and gold continued to power higher. In the third arrow, you can see that Fed begins to cut interest rates. Gold goes on a tear. It's not at a record high at this point, but it does hit a record high after that. So that leads us to say that the Fed has just begun to cut interest rates, and that even though gold is at a record high, it could continue to power higher as the Fed, just begins what will be, a multi-month rate cut cycle. So that is something that is very, very important to pay attention to. So Laugh Lounge is asking, is a Trump victory bullish for the dollar? If you listen back to what I said, a Trump victory is seen as initially bullish for the dollar. And the reason for that is because it's negative for the other currencies, and that the tariffs are very negative for euro, for yen. And so, and that will cause uncertainty and anxiety and the threat to growth for those countries, particularly, the car producing nations. And as a result, it's not so much that it's bullish for the dollar, it's more that it's bearish for those other currencies. And that is why today the dollar is selling off, as the polls show an unexpected lead for Harris in Iowa. So that's basically the look at the elections. Now, how to trade the elections, I already ran over that. In general, if it's a resounding victory for Trump, you're probably going to see a bit of dollar strength and weakness for euro, for yen. If it's a resounding victory for Harris, you're probably going to see whatever movement today continue, and gold probably pull back. If it's not a clear victory, it's going to be uncertainty for the markets and probably risk off mode. But at the end of the day, the best way to trade the election is really to wait for the dust to settle, because as I showed you in the charts earlier, there tends to be a lot of continuation after the elections, and that continuation lasts for days and weeks at a time. Okay, so now let's take a look at the heat map. I want to share with you the fact that my central bank tables. There are 3 central bank rate decisions this week. Aside from elections, we have the Federal Reserve rate decision, we have the Bank of England's rate decision, and we have the Reserve Bank of Australia rate decision. So when we have these rate decisions, I like to look at how the economy changed between the last meetings to get a sense of what the central bank could do, what the central bank could say, because we like to put ourselves into the shoes of the central bank. And to do that, we kind of look at how the data has changed. So I built out the central bank tables that show you how economic data has changed since the last Federal Reserve meeting in September. And you can see at first glance, it looks like it's as much dollar bearish as dollar bullish. And that, pretty much it's a wash. There's been improvements as well as deterioration in the U.S. economy. But let's take a closer look. So on retail sales, retail sales is the backbone of the economy. So on the monthly basis, retail sales, the headline number was weaker. But if you extract auto sales and you extract fuel costs, then core retail sales actually increased. Consumer sentiment is up. The conference board number is, significantly higher than where it was the previous month. Non-farm payrolls definitely much worse than expected, but unemployment rate dropped, and average hourly earnings, which is very, very important, 0.4%. You see it's dollar neutral, but actually that is a pretty robust number of average hourly earnings. So even though there's no question that the labor market's weakening, some of the other reports tell us that there's underlying strength. In terms of inflation, consumer prices is up, and consumer prices matter a lot more than producer prices. And producer prices is lower. So even though producer prices is lower, consumer prices are higher, which is another reason why the Fed is more likely to do 25 versus 50. Housing market, U.S. interest rates were lower. Now they're higher. Housing market activity is pretty much mixed in the sense that existing and new home sales are weakening, but, pending home sales seem to be up. Housing activity seems to be restarting. In terms of the ISM, we also have ISM services this week, but manufacturing ISM is in contractionary territory and took a nosedive. Service sector ISM was higher in September, but I think the October number is going to be weaker. Trade data was better. Industrial production is better. Stocks are higher. U.S. Treasury yields are higher. And that U.S. Treasury yield number is pretty important because it means that the nearly, 0.8% rise in U.S. Treasury yields on a 10-year basis basically tightens up the economy and is negative for inflation. So what all of this means is that, yes, the Federal Reserve will most likely, pretty much guaranteed, although there's no guarantees in life, that they're going to cut interest rates by only 25 basis points. But they still need to do more. They're not done. They're going to be dovish because inflation is still moving lower. Non-farm payrolls, even though it may rebound in November, is still, labor market is still softening, and that there's, certainly, I don't include the beige book here, but there's certainly more concern than optimism for the Federal Reserve. Taking a look at the Bank of England table, the Bank of England is also expected to cut interest rates this month. They're expected to cut interest rates by 25 basis points. Now, there's a couple things going on for the UK. For the most part, you can see in my table, there's more red than there's green, just a little bit more. Retail sales seems to be up, but not up significantly. Labor market activity has improved, but earnings are down a lot from the previous period. Inflation is down. It's below 2% year over year. Now, remember, these central banks like to have inflation around 2%. The U.S., you saw, was above 3%. And below, they don't want it significantly below. They want it right around 2%. And core and year-over-year CPI is already below 2%, although core is still well above 2%. Housing market activity, for the most part, is weakened. PMIs, manufacturing services, composite, all lower. Stocks are down slightly. UK yields are up. Now, based upon all of this, the Bank of England should cut 25 basis points and be very, very dovish. But last week, we had the UK budget. And they came out with a very, very aggressive budget. And in this budget, they basically had a big bet on spending, major increases in public spending, paid for by taxes and borrowing. And that major pickup in spending is expected to bolster growth and boost inflation. And that is why, believe it or not, the market thinks there's going to be 25 basis point rate cut from the BOE this month and maybe no change in December. I don't know. I think they may still, we don't know. It takes a while for the spending to really manifest itself. And I think that there's enough concern in the economy that the Bank of England will need to leave the table open for easing. And that is why, I think I'm still more bearish than bullish the British pound. And the last central bank rate decision we have this week that for the currencies that we trade is the Reserve Bank of Australia. So with the Reserve Bank of Australia, no changes are expected. Aussie is one of the best performing currencies this morning. Aside from China delivering more stimulus, we have retail sales down a little bit, but consumer confidence is good. Those jobs numbers are so strong. And, Boris and I just came back from Australia, and the economy is definitely, still churning. You're running on all cylinders. And, the people that we're talking to are finding it hard to find employees, and the labor market is tight, reflecting these really, really robust jobs numbers. Inflation has come down quite a bit. Last week, we had the Australian inflation report, and inflation was at a 3-year low. So that's going to be a little bit worrisome. It'll be interesting to see whether the RBA addresses this. But aside from that, business confidence is down a little bit, but trade data is up, manufacturing services activity is down. So there is a little bit of deterioration. It'll be interesting to see whether or not the RBA's tone shifts a little bit. So even though they are not expected to change interest rates, between the inflation, the PMI deteriorations, I'll be interested to see whether or not we actually get a deterioration in any sort of dovishness from the RBA. So I'm neutral dollars this week. I'm neutral dollars because, we don't know how the election is going to fare is too big of an event risk to really be leaning one way or the other. And we'll know, we may know Wednesday morning. We'll see. And also with the FOMC itself, though, I think that they're going to cut interest rates. I think that Powell still has more cause for concern than optimism, even though data's been good, and that I think he's going to have to leave the door open for additional easing in December. I'm bullish euros simply because Eurozone. I mean, this week is not a week about euros at all. We have no major Eurozone data, but the inflation data we had this last week, the GDP data that we had last week was more stronger than weaker. But of course, Euro will be, driven almost entirely by how the US dollar moves. But on an economic and fundamental basis, data was better last week. Sterling, I'm neutral because, data from the UK has been softer, but the Bank of England, that's a big event risk. We'll have to see. Aussie, I'm more bullish than bearish because at least, RBA is expected to leave interest rates unchanged. And I think that's going to lead to a bit of an outperformance in Aussie. CAD, I remain bearish, even though we did have oil prices rise quite a bit today. And the reason for that, because data from Canada has been quite horrid. This week we have IV PMI and jobs reports. It seems like, normally that's really, really important. But it seems a lot less important this time around because we have so much other event risk. But I think those numbers will be softer. We also have New Zealand jobs data. And with New Zealand's jobs data, we're also looking at the possibility of some strength in New Zealand jobs data because we did have stronger manufacturing and service sector activity. I'm bearish Swiss francs. Swiss data was very weak. Inflation, retail sales, all of them have been softer. Neutral yen, because that's hands down going to be driven by the election results and the market's risk appetite in general. The election results from Japan definitely led to a bit of weakness in the yen. But the Bank of Japan, who left interest rates unchanged last week, also indicated that they are still looking to raise interest rates. So just going through the calendar quickly, just to take a look at some of the event risk on the calendar. Let me see if I can get the dates set up here. I'm going to run through this quickly because I know that Boris wants to jump in. But we did have upward revisions to Eurozone PMIs, and those were stronger, contributing to the rally in the euro. We only have factory orders this morning. It's not a huge market moving report. RBNZ financial stability report is interesting. Tonight, we have the RBA rate decision. As I said, they're going to leave interest rates unchanged. It'll be interesting to see, what their tone is. For BK traders, it's at 10:30 New York time, which is after the time we lay out our trades. So we won't be trading Aussie tonight. We'll be looking for opportunities in other major currencies. And then on Tuesday, we have some minor data like the trade balance from the U.S. ISM services is important. That's probably going to be weaker after the non-farm payrolls report. But the main focus will be on the election. And, everything's going to be about election. You're probably going to see whatever moves happen today continue, which is profit taking. Profit taking on the dollar yen had a really, really nice run in the month of October. And so I think there should be some profit taking in dollar yen, maybe even some profit taking in stocks because the uncertainty is so high. New Zealand jobs report, market looking for a weaker number. And then on Wednesday, it's all going to be about the election results again. But aside from that, we do have IV PMI, which is expected to be stronger. We have Chinese and Australian trade data. Thursday, we have German industrial production numbers and the Bank of England rate decision. They're expected to cut interest rates, and their guidance will really be key. The 25 basis point rate cut is expected. Same day, we have the Federal Reserve rate decision. 25 basis point rate cut also expected from the Federal Reserve. So that is also expected to be something that is driving the markets. And then on Friday, we end the week, with CAD labor market numbers. That is expected to be weaker as well. But the main event will be FOMC, BOE, RBA, and of course the US elections. Now, if Harris wins, I'm getting the question again, is it negative for gold? I think it will be negative for gold because I think it represents continuity, a little bit less risk aversion and uncertainties, which will probably end up being more negative than positive for gold, at least initially. But as you saw in my tables earlier, where I showed you this chart here. Regardless of who wins with monetary policy, you can see Fed cut cycles is positive for gold. So, gold declines will probably be bought, but on a Harris victory. But, it could be a steep decline. It could come down to at least 2680, which is that former breakout point. Could even come down to 2640 before it pulls up. Euro rallying charts. None of these charts really matter, in my opinion, because it's going to be completely thwarted by the election results. But right now, it looks like Euro is trying to carve out a little bottom, maybe extend to 109.40. Don't expect any breakout moves before the election. Pound is kind of stuck in a wide range. Pound is definitely weaker than some of the other major currencies because of softness in data and the BOE rate cut expected. But for the most part, it is definitely expected to be lower. Dollar Swiss, I think dollar itself is probably going to pull back some more ahead of the election. We still have, more than with 36 hours at least. And so I think we could see more profit taking. It's not so much a view on who's going to win, who's leading in the polls. It's more a view of profit taking after such, for example, overextended rally, profit taking in dollar yen ahead of the elections. And Aussie dollar, basically carving out a little bottom here. I think this could persist. The RBA is expected to leave interest rates unchanged. Kiwi dollar, same story, but once again, it's all about the elections. Dollar CAD, on the other hand, even though I'm bullish dollar CAD, I think from a technical basis, dollar CAD looks probably like the one that is most prone to a correction down to 138.30. So that's basically what I'm looking for. And, I'm going to give Boris the opportunity to say hello. I think I answered most of your questions. If you have any further questions, feel free to type in. Otherwise, do you want to say hello, Boris?
Hey guys, sorry, I just had to get my screens up on. Good morning, everybody. How's everybody doing? Hope you guys had a good week. We really enjoyed our stay in Melbourne, Australia. We had a really good time. A couple of things I think I kind of want to reaffirm. Kay was absolutely right. Australia is booming. Labor markets are very tight. Restaurants were full. Melbourne was hopping. And it looks like, I think, if you're going to trade the Harris victory, which it's very much problematic. I don't know if it's going to happen. I do think that the dollar weakness against the Aussie probably is going to be an interesting trade. Maybe even Euro Aussie could be a trade for Kathy because she loves to do those cross trades. I'm just riffing a little bit. I wanted to also come back and show you the betting market.
I think what'd be interesting, Boris, is for more you talk about what happens if there's no clear victor.
Yeah, I'll get to that. I will definitely get to that in just one second. I just wanted to I wanted to kind of set everybody's expectations that while the markets may be moving towards Harris, the betting markets still show relatively. This is Poly market and this is Kalshi at 55.45. There's still very healthy spreads to Trump, basically on the assumption that he wins the swing states. Now, as Kathy was referring, the Iowa poll, which is the Seltzer poll, this is a lady who sort of is known as the dean of Iowa polls. She's only wrong once, or wrong. The last time she was wrong was 2004 when she had John Kerry up against Bush in Iowa at +3, and she was completely wrong about that. The argument here is that, women are breaking hard for Harris, primarily because of the abortion issue, which I think is very legitimate analytical point. The bigger argument, and this is really the critical argument if you kind of handicapping the election, there's no doubt that there's a massive gender spread. Men are voting Trump, women are voting Harris. Women are a larger part of the electoral pool than men are. And all of the polls are factored into a +10 women spread. In other words, women go +10 towards Harris. What is fascinating and where the numbers really, become very problematic is if women go +13. If the spread goes from +10 to +13, that puts all of the polling models out of whack, could really give Harris the potential.
So I have a question here. So you said that women are a larger part of the electoral, I guess.
Yeah, women are a larger part of the
larger
population and a larger part of the electoral pool.
Let me ask the question. Yeah. So my question is a larger part of the electoral pool in the swing states?
Yes, everywhere.
Okay.
Yeah, I mean everywhere. I mean, gender-wise, women. There's more women voters than there are men voters everywhere because there's more women than men, and women tend to vote more than men. So all of that is sort of been factored in. As I said, the critical question is it going to be plus 10 or plus 13 on the spreads? If it's plus 13 Harris amongst women, I think it's going to be much closer than people think. Like if it's plus 10, it looks like I think Trump wins. If it's plus 13, it could be a real mess in terms of tie-ups. Now, remember, at this point, neither campaign is going to concede anything, even if it's a clear majority win for one or the other, because so much animus has gone into this campaign that everybody's going to claim cheating, interference, all sorts of issues. And because the United States, I've told this to my friends in Australia, most people don't understand this. United States is not a democracy. We're not a majority win democracy. We're a republic. It doesn't matter if you win the popular vote by 100 million votes. It's utterly immaterial. So if you have to win the Electoral College, those votes are only 70,000. Trump lost the election by 70,000 votes last time. He won the election by 60,000 votes in 2016. That's the votes that are going to be fought over, regardless of who is leading by either candidates. This, I think, is an existential election. Parties view this as essentially the end of the world for their position, and I think there's going to be a tremendous amount of acrimony, which means it's very unlikely. I mean, unless we sort of have like 500,000 votes spread in the swing states, where it's just clearly dominant and all the dominoes fall, you're going to have lots of litigation, especially because there was a lot of issues in pre-election. For example, Bucks County, a very hard fought over county in Pennsylvania, which was blue, has turned red. Completely understaffed its polling places. People had to wait 5, 6, 7 hours online. It's something unconscionable. Clearly a case of election interference, and presents a pretty strong case law of interference on demand. So my point is that I think you should be prepared for lots of litigation. And then of course we talked about the scenario, which is not at all out of the realm of possibility, that given the fact that some of the states allow fractured voting. In other words, Nebraska, for example, awards its electoral votes by county, by its house district. So does Maine. It's very possible that, for example, one Nebraska vote becomes blue, one Maine vote becomes red, and given the way the states, the swing states are breaking up, it's not out of realm possibility that we could see a 269 tie. So in other words, the Electoral College can in fact be tied. And then I think that's one of the few people, most non-Americans, even I think probably many Americans don't realize this, that it's actually the sitting vice president that breaks the tie. So you can imagine if we get into a situation where there's 269, and it's Kamala Harris voting herself into the office, especially since she never went through the electoral process to start with, will be incredibly controversial. Let's hope none of this comes to pass, because I think it could be very, very bad for the country, bad politically for everything. It'll certainly be very interesting for the markets. But I think the key point here is my friend Anthony Cordelli, who's going to be on Trader Fest with me. We're going to be letting you guys know next week that Trader Fest 24 is coming. It's going to be a really great event. It's going to be on multi-streamed on lots of YouTube channels, and I'll be sending you links about this as soon as we sort of go live on the landing page. But he's going to be one of the guests, and he's a great seasoned trader. And he said that today he wrote a long tweet talking about the fact that as a trader you need to know three things: when to be big, when to be small, and when not to be at all. And he says that this week, given the volatility, you should really be small or not at all. And I think that's really great advice, in a sense that because of the massive volatility that could happen, literally, you could get whipsawed by 100 points in a minute depending on how the news flow changes, depending on how rumor flow changes, depending on anything that else is going on. So not worth it to gamble lots, but it may be worth it to just gamble small and see how the markets treat you. We're certainly going to trade them as we go forward. Let me see if there's any questions here from you guys. Let me see if I got anything going on over here. So yeah, Harsh was asking me about gold. Now, this is my personal opinion on gold. So I think I sort of agree with Kathy. Yes, if Harris wins, there may be a little bit of a pullback in gold. But gold to me is a bullish trade, irrespective of who is running the presidency, because gold ultimately, I think, is acting on the fact that we have a $35 trillion budget deficit that continues to expand at an exponential rate, and that is absolutely putting tremendous amount of pressure on fiat, and gold is basically an anti-fiat trade. So I think that's going to be a continuously strong trade. And you can see gold generally has been a very, very positive trade. I traded this long over here as I did. Are we married? So it's a common question we get. We are married to totally different people. So we're not married to each other. This is very funny that people ask us that. Am I... I wonder why. Did Kathy leave? Oh, I guess Kathy left, right? Okay, why am I seeing late? I'm seeing a very, very late feed on my thing. Okay, all right. I'm just gonna assume you guys are seeing me. You guys are hearing me, right? Give me a yes here. I need to. Let me see if I can put you guys on another feed, because
everything is working perfectly, Boris. You probably just have your YouTube on an earlier session. You probably have it scrolled.
Yeah, but like it was like really, really late.
Everything's working perfectly.
Yeah, this actually reminds me a very, very important point. All right, so guys, this is a very important point as far as live trading, which we're going to get into right now. There is a 10-second delay between what I say and do and what's streamed on YouTube. This is just simply a fact of life because of the streaming software. Now, the good thing is, and people when we were in Australia, some of our customers told me this. So the good thing is, I will always tell you ahead of time what I'm going to do, how I'm going to do it, and so you will have at least 30 seconds to maybe 50 seconds before the trade happens. Therefore, you can prepare yourself. But if you're looking sort of like, for me to say something and the event happening, it'll be about a 10-second delay there. So just prepare for that fact. All right. So let me see what else going on here. Yes. Okay. What's going on over here? Okay. You know what? Let me just, yeah, there we go. Okay. I was just on a totally, will prop allow this kind of event trading? Yes, I think especially Apex, our friends at Apex. Let me put a link in here for you guys. My friends at Apex, they're not restricting any kind of news trading. I haven't seen them, say that they're going to restrict even sizing. They're perfectly happy to take the size and the trades as far as it goes. Obviously, you don't want to over leverage and you could just as quickly get stopped out as get pulled. But there's so far no immediate restrictions on how the trading goes. They're going to warn you, of course. First of all, the election is not kind of an event-based trade. There's no particular calendar time when something happens, so you can't even restrict it that way. But as far as I know, yes, I'm going to be trading prop. I'm trading prop right now, and so far execution has been excellent. No problems on my part as far as that goes. Okay, the indicators that you're seeing, great question, are proprietary indicators that you can get only by joining us. I'm going to give you a, hang on a second, I'm going to give you a discount link to join us. I just gave you a big discount link in the link. You can join us here. You can also join me in my coaching if you want to join me. Either way, either you join us for a month or you join me for coaching, you will get these indicators and you'll be able to trade exactly like I do. And really, really kill it. Which brings me now to live trading. Let me see if there's any more questions here. And sorry, guys, I'm rubbing my nose because I came back with a sniffles, and this whole week I'm just gonna sound like I'm gonna be sniffly. Okay. All right, lots of fans for Kathy. Of course, she's brilliant. I'm glad you guys like it. But now it's time for us to get dirty and start trading money. So I want to, first of all, just summarize the very simple, very effective scalp strategy that I'm using. In trading, let me see if I can actually hang tight a second. I'm going to pull up the, bear with me a second, guys. Okay, rules. Okay, let me see. Show. Okay. These rules are actually a little bit out of date. I'm going to have to make new rules. I put up the rules. We're trading futures in this particular case, and I'm trading them with a 1-to-2 risk-reward ratio. But actually, everything you see here, well, for the S&P or for NASDAQ, divided by half. I'm trading 1 point target, 2 point stop instead of 2 point target, 4 point stop on the things, and 5 points, 10 points on the NQ. I'm going to fix those a little bit later. Those are the very short-term targets that I'm trading with. But how do I trade? This is the really cool part. I've thought about this a lot. I traded a little bit when I was in Melbourne. It was really, really fun. I was actually, we were in meetings with partners that, of course, while everybody was talking, I was trading futures from there. And it was, they were all making fun of me. But I'll tell you what I did that has just been working like a charm that really, really, really just simplifies the whole process, which is this. I've been doing nothing but trading with trend, scalping with trend. We do have a methodology for picking tops and picking bottoms, but I've actually found that while it's enormous amount of fun, I love to pick tops and bottoms. It's actually pretty much a sucker bet most of the time. It works okay, but it works nowhere near as well as trading with trend. So let me show you the hardcore method of trading with trend that I've been using, and we'll try to put it into play as the markets go through. I'm actually killing myself because it was 3 or 4 trades here while Kay was talking that I could have taken, but I just didn't. So the classic trade with trend has 3 ingredients in my indicator. We have the long-term trend, which in this case is a 200-period SMA. We have the short-term trend, which is the 8-period SMA. You can modify them, but those are the standard suggested retail settings that I'm using. And then we have signals. Now, the purple signals are counter trend signals. They are buy signals in a downtrend, and they are sell signals in an uptrend, right? These are counter trend signals, right? And the general rule of thumb I like to use is if I have 2 counter trend signals together without any trend signals in between, the reds are trend signals. If there's 2 continuous purples together, maybe I'll take a reversal trade. Maybe I'll take a bottom fishing trade or a top fishing trade. But the absolute best trade to take is when you get a counter trend signal, when you get a purple triangle followed by a red. It's the resumption of trend. You get a counter trend move, trend resumes. Boom, boom, money, money, money. Point, 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 point. Right? As a matter of fact, if I get a red triangle now, I'm going to short it now. Now that may be the 4th or the 5th short in a downtrend. I may be a little bit tired. I don't care. It's worth taking the trade because continuation trades against the counter trend signal. So you have a counter trend signal and then a trend signal. Money. That's been the pure money. As you can see here, in this case, I was actually using the red signal as a counter trend signal and the green signal as a trend signal, and I took that to the upside. I could have taken this over here. I didn't get a chance to do it because again, I was just watching Kathy talk. But the classic trend counter trend is purple followed by red, short the red. Purple followed by red, short the red. Purple followed by red, short the red. Purple followed by the red, short the red. You can do that in perpetuity. It doesn't always work. Well, here it worked. I just realized that actually here, the purple is after the red, so it definitely would have worked. So even here, it would have worked. I thought here it might not have worked. But the point is, it works really well 3 out of 4, 5 out of 6 times when you get a nice continuous movement in trend. Now, when the markets are choppy as hell and it's going up and down over the long-term moving average, yes, you're going to get a lot more chop. It's going to be a lot more difficult. But at that point, what you're kind of waiting for is just simply some sort of alignment. Eventually, eventually the moving average are going to separate. They're going to separate themselves in one direction or the next. And once they separate, that's when you really get the money trades. That's when you get the trades that really create lots and lots of continuous trades. You're seeing a black triangle. How do you update to purple? Just simply delete and reapply. Sometimes you need to log in, log out. The latest version of the BFF says BFF scalper dark light. And the reason why, there's nothing, if you have a black triangle, it's not going to make any difference. The reason I changed it to purple is because this allows people who have a dark mode. So right now I'm in light mode, but if I were to go to dark mode, right, let me see if I go to dark mode, dark theme, right? You can actually see the purple triangle on my charts right now. If you like the dark mode, it's good for you. If you don't like the dark mode, you don't have to do it. But now you can sort of see the purples on both sides of the aisle. I'm not a lover of the dark mode in this particular indicator, so I'm going to try and stick with a light mode. But this allows you to have both possibilities, which is why I did it this way. All right. Yeah, some people really prefer dark mode, and so the black triangle was completely invisible in dark mode, so that's why it didn't happen. So 9:45, Monday morning, there was a lot of talk about. There's all sorts of trades here that we missed, and then we just have to let go. While we're kind of waiting for trades, I got to tell you something really interesting. So it's a 30-hour flight. It was two 14-hour legs. We flew New York to Doha, Doha to Melbourne, and then we flew back Melbourne to Doha, Doha to New York. So when you're on a plane that long, there's nothing to do but watch movies, right? And I saw a lot of terrible movies, but I did see a couple of good ones. And one of them was this really interesting movie called Knox Goes Away. It was starring Michael Keaton, who everybody loves. But what's interesting is that Michael Keaton also directed the film. It's clearly a project of love for him. And it's about a sort of an ex-special services guy who becomes a hitman, who then suffers sort of a rapid, he's an old guy, and he suffers the sort of a rapid mental decline because of a variant of Alzheimer's disease that, sort of he forgets, he becomes very, very forgetful in memory. It's kind of a race against time where he tries to help his son before he loses his mind, and is able to sort of let his son escape from a murder that his son commits that was unintended. Anyways, convoluted plot, very, very fun movie, really, really well made. None of that matters, because what's really matters is he plays a cold-hearted assassin. It's a really fascinating character study because he sort of plays a very decent man, but who has just absolutely zero pity for any of his targets, regardless of who they are, and just kills everybody with just this cold, dispassionate, no mercy view. And while that's certainly not a value any of us want to espouse to, that is very much the value you need to have when you're trading. I realized this as I was watching him, that absolutely the assassin mind is the mind you need to have. And what I mean by that is you absolutely need to be cold-hearted about every trade you take. Win, lose, but not die. Because the key thing, the key thing to his success was that he was sort of very cold and efficient, and therefore was able to just walk away from any sticky situation because he knew when to cut his losses. And I think that's kind of a really interesting approach to when you take the market. Remember, the market is not real life. The market is an artificial game that we all play. So it's perfectly okay to have a set of morality towards the market that's completely different from the set of morality we have towards life. And my point is, I guess, is when you get yourself into that mindset, and I actually started following myself into that mindset, you absolutely do not give a flying F about any loss you take. You have to look at it exactly the way he looks, at a kind of a, kill, which is walk away. Just walk away. It doesn't matter. There is no reason to stay in a trade, to repair, to nurture a trade, or to be wistful over a trade that didn't work. You need to have an absolutely cold-hearted assassin mind, because that creates an incredible sense of freedom to operate, in perpetuity and to succeed. I just thought it was really, really interesting in terms of thinking about it this way. Yeah, Knox goes away 2023. 007 put up the link. Really a good movie as a character study. But more importantly, I thought it was a real interesting lesson to us as traders, that having that kind of mindset absolutely helps you as a trader. Okay, so let's see. We still have nothing setting up over here. We do have in gold trend going negative, but no real signal for me just yet as far as trading goes. Nasdaq, Nasdaq has no signal for me either. S&P, we just have to sit here and and wait. And that was another thing interesting about the movie, is that he was very patient in his actions, very determined, and I think you have to be that way. So I just I thought as a mental model, it was a really, really good model for us to have. Could we see the past result? Santana, why don't you just watch every one of my live trades on demand? They're all recorded. You can go into our channel and go see live, and you'll see all the trades. As far as results go, passing the prop test is a very, very difficult proposition for most people. Only 4 or 5%, less than the people that get into an Ivy League school pass their prop test. But in my pass the prop coaching, more than 70% of people pass the prop test, and then another 20-30% of those go on to actually collect money, versus only 1% of people who actually go on to collect money. So hopefully the proof is in the pudding, in the sense that people really, really enjoy. Oh, we got a possible short here. So let me not talk. Let me sell this. Short the Nasdaq. It's going to probably retrace on me because it's a very, very, very large short. It wasn't even. I made a mistake. Sorry, I made a mistake. There wasn't a red triangle. This was a mistake trade. Shouldn't have taken the trade. You see that the red triangle disappeared at the very last second, and I took the trade. Fine. We eat this. We'll just wait for a better trade to set ourselves up. I made a non-assassin mistake. I did not wait for the candle to close. Sorry, I'm gonna try and answer questions as best as I can, but I'm gonna start really focusing on trade signals. The robot is doing really well. I'll talk about that later. I don't want to talk about the robot or not, because I really want to look at signals. I'll be sending out, those of you who have the robot, who bought the robot, I'll be sending out the final version of the robot later today to everybody with the video, so you should really enjoy it. In the meantime, I want to try to make sure that I get the signals going here. Nothing going on here, so it's just nothing to take, but that was annoying. All right, so we will we'll look for new ideas. So we had lots of negative flow on the open. Kind of found the bottom over here, pretty much at the. If you look at the S&P, this is pretty much, I think, the lows of the session, right? What was the? It was. Yeah, you see me. I was trading the session earlier. By the way, the other thing that's interesting is, so the Asia session lows were about 45, and we are at. We went down to 36 and came back up. What I was going to say is, the other thing that was interesting is, when I was in Australia, we traded the Asia session quite a lot, and I absolutely loved it. Asia session was really, really cool as far as trades go. I'm going to go long. I'm going to long gold. It's not basically it's a variant of my negative positive dynamic here because we have a red triangle against a green triangle. I'm sort of taking the red triangle as the purple retrace, kind of a substitute for purple retrace. Now again, I'm extemporizing a little bit here. We'll see if the trade works, and if it doesn't, we'll repair it a little bit later. But gold has been relatively positive. Gold has been positive, as a trade for quite a while. Generally buying the buy signal is a pretty good, it's been a pretty good strategy. So I'm long here, target is 54, stop is 51. So my entry is 53 on gold. Let's see how it plays out. You can see it on the charts here. I didn't give you too much warning, but I know it's on delay. So when you guys see me enter, you actually got much better prices than I did. You probably got, $40, $50 underneath my prices. So you probably are going to be doing much better than I am on this trade, as far as trades go. All right, so let's see if you have any comments, because I'm going to just watch the trades. Oh, so somebody's saying you don't have a counter trend signals. Let me explain to you how you put the counter trend signals on. You put the BFF scalper on the chart. Then you put, and the default is going to be continuous, right? Continuous mode. That's going to be continuity mode or continuous. Then you put a second just to add one more chart on the chart. You notice I have two charts on here, and the second one you put into reversal mode. So one of them is in continuity mode, one of them is in reversal mode. Once you do that, you will see the reversal triangles on the chart. Okay, so you will see those. Now, speaking of reversal triangles, I have two purples, one after the other over here, right? So there's no reds in between. This is not a bad reversal signal. And I'm going to, assuming it holds, I'm going to see if I can take it here. And we'll let it play out. 14 seconds. That's a big move here on the candle, but we will let it play out. What time is it? It's 53 seconds, 54 seconds, 3 seconds, 2. Okay. I'm long, and I'm 58.25. And you can see that trade worked really, really well right away. So I told you I was going to take the trade, right? I know it's super fast, and you can't wait. I know there's a delay on YouTube. So by the time the trade happened, you already see it on video. But remember, I'm telling you ahead of time, I'm going to be taking this trade. So if you want to follow me, you listen to what I say, because if you do what I do, there'll be a 10-second delay. I'm just becoming really, really cognizant of it, because when I was with our friends in Australia, a lot of traders told me that this is just a natural aspect of YouTube, and because we trade so fast, you need to be mindful of that. So I'm very, very mindful of telling you what I'm going to be doing ahead of time to make sure that you guys, follow me. At this point, I resolved this trade for a quick point on a reversal. I usually said I don't do reversal trades, but because this was two purples without a red in between, I thought it was worth a shot. Maybe we'll see if we get any kind of a continuity move. If we're going to move above the moving average and get a pump on. Get a pump on the S&P. Here, I'm actually going to take this right now because I was a little bit late on this entry, and half a loaf is better than none. Those of you who got better fills than me, feel free to take the trade early. But regardless, money here, money there. I never look a gift horse in the mouth on money. That probably goes to target for us for a full point. But as I said, because I entered kind of a little bit sloppy, I could have entered here at 52.5, which would have been 53.5 target would have made me. I took half a point instead of a full point. Anybody follow me in any of those trades? Anybody do the gold trade or the S&P trade? Let me know in the comments. I'd love to know it. Sorry, again, I know I'm rubbing my nose, but it's just because I'm really, really stuffy. Took the gold, right? Gold is gold, baby, right, Cheryl? Gold is money. Gold is money, money, money. What'd you get filled on gold and Cheryl? Did you get filled at 53, or did you get filled better and took better money out of it? Anybody else besides Cheryl took the gold? Let me know, guys. I'm curious. I'm curious. Yeah, it took before me. Yeah, what'd you get filled at? You got 50, 52.7, 52.4. Anyways, it's all good. I'm glad you guys did well. Oh, so just an update on the robot for those of you who are interested. By the way, if you're interested in the robot, it's still available at this huge discount price. So let me put the link in here. You guys want to do the robot? So I want to just kind of tell you, we had daylight savings time. I got completely screwed up on time. The trigger points, the way the robot trades is supposed to trade around 3 o'clock in the morning as its first trade in all the indices. One of the interesting things that I sort of discovered when I was in Australia is how cool it is to trade the Asia session in indices, because it's much smoother, cleaner type of trades. You don't have nearly as much volatility you got to work with. Anyways, point being is I screwed up, and it triggered at 1 o'clock in the morning instead of 3 o'clock in the morning because of DST time and adjustments, so on and so forth. So I got clipped in Dow Jones in US 30. So that's a minus $300 trade, right? So full minus 15x loss, right? Big hit. The last couple of days were just all money, 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 money. When I was in Australia, it was all working well. So get clipped. Think trades continuously. Think is trading boom, boom, boom. Net point I'm trying to make is in 5 hours, it made the 300 back and P&L more. I mean, there's just nothing like having a robot work for you. It's amazing. It had to do I think 25 trades, worked itself out. There's no way a human being could even begin to do this. And that's why I love the robot. The robot is not about being smarter than you. The robot is just simply about working harder than you. That's all it is. It's really, really fascinating. As I told you guys, I'm reading this book. I'm watching. There's no trades here, so might as well riff a little bit about the future of trading and the future of AI, in my opinion. So I'm reading this book, which I absolutely love. It's called The Short History of Intelligence. It is one of the most fascinating books about us as organisms and computers as organisms, because you kind of understand us, you understand computers, and you understand AI and neurology. And so I'm sure many of you have heard that, many of you know that, for example, all the chess computers can beat every single human being. They can even beat Go. Anybody who plays Go in Asia, which is a game even more complicated than chess, can beat them. Now, just to give you an idea, chess has more possible moves than there are atoms in the universe, right? So it's just insane at the possibility of topology that chess has, and yet the computer can beat the human being. The question is why? And the guy explains exactly what the computer does when it trades against a grand chess master, right? You guys want to know what it does? Because it's really, really interesting as far as trading goes for us. You did. So yeah, I'm sorry, Ibrahim, you're saying there are different prices. Ibrahim, I bet you're trading CFDs. I'm trading gold futures, right? So just to let you guys understand, you're probably trading CFDs. So you're absolutely going to get very, very different prices. I'm trading the prop account for Apex on US futures markets prices, which are going to be different from CFDs. It's completely immaterial because direction is going to be the same, but CFDs are going to have different prices and they'll have bid-ask spreads on there. So that's why you're seeing different prices. Okay, so now that explains it. Yeah, don't worry. You're not. The direction will be the same. The prices will be different. All right. So back to like, how does the computer beat a human being in chess? Right. So this is what they do, and but the same thing goes with Go. So the computer basically uses trial, exactly like the human brain, trial and error. It does imagination. Like the thing that made us dominant as a species is our ability to imagine. No other species can imagine the future the way we do. The mice come close in terms of they can imagine alternative stuff, but we can imagine very, very deep scenarios forward and backwards, which means that we can plan possible different futures than the futures that we are just simply programmed by instinct to do, right? But here's where it becomes really, really fascinating. So the computer also is, trial and error. It looks at what happens if I do, 35 steps forward. What's the result here? What's the result here? So it basically looks at all these possibilities and says, okay, if I do this particular step, I have a 35 out of 40 chance of winning the game, right? Because it moves 35 steps forward every time it looks at a possibility, right? But there's literally a million possibilities on every single chess move that you make. It can't process that. However, it can process 1,000 of the the most likeliest, highest probability scenarios in half a second. Right? Now, how are you going to compete against that? Can you process 1,000 different scenarios in chess, 35 moves, 35 steps forward in half a second? You can't. You can't, right? Just can't. That's why computers beat us, right? But so why I bring that up is because the robot that I'm trading is obviously nowhere near the intelligence that Big Blue is. But what is it doing? It's did 25 trades in a matter of 5 hours. Perfect entry, perfect exit, perfect rule set, perfect this, blah, 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 right? Do you think you as a human trader could have done a tenth of that? No. Look at me. I fucked up one trade today already on the open because I wasn't paying attention, right? So the point is that, in my opinion, this is why machines are so powerful if we employ them to our advantage. And that's why I'm so excited about the algorithmic trading as a tool set. It's not a substitution. It's a much more primitive thing than the Big Blue in many ways. But as an execution machine, it's just it's incomparable. This is what ultimately AI is basically thinking through 1,000 scenarios versus one scenario. That's why it's so powerful as a thing. It's just guessing 1,000 times versus only being able to guess once or twice, right? So that's just sort of like a interesting point. It's the brute strength of computers that we just don't have. Enzo says in pre-market you took 5 trades following the indicator on NASDAQ and the ES. Well, so my money trade, the trade that I really, really like, Enzo, is not the green triangle. What I really want is I want the purple-green sequence, and I want the purple-red sequence. I want it to kind of sell off and then reestablish trend. And if you have that sequence, which will happen, like right now we're going positive trend in S&P. I wonder if we're going positive trend in NASDAQ. Yeah, we'll go positive trend in both. We'll see if that holds. It may just simply come back down and maintain its negative trend. It's hard to say, hard to see. You see, for example, I'm watching gold here, and gold is also just wiggling around. Where we want to be, the sweet spot of trading, if you want to know like visually where the sweet spot of trading is, it's when you have moving average separation. So the blue is significantly or at least marginally above or below the black, and you have this purple green or purple red sequences, because that suggests you get continuity of trend, right? So you have separation, you have the purples over here, you have the red reestablished, boom, you're done. You always want to be trading with the establishment of trends. Here you get a red reestablishment right now, 47 seconds. It's a very, very early signal, but if it holds, this is NASDAQ. We'll see if NASDAQ, I'll trade NASDAQ with you, because Because one of the things that was fascinating with my assassin mentality is I realized that, it doesn't matter if it's NASDAQ or S&P, it's just a target. And you're just only making yourself weaker by saying, oh, I can only trade one or I can trade the other. It's either going to work or not work. You got to take the trade based upon rules. And then you got to stick to your rules to resolve the trade. As long as you do that. So I got 4 or 5 seconds left here on NASDAQ. Let's see if this holds. Okay, I'm short. I'm short this, targeting 5 to 24.75. Now, is it going to retrace up my ass? Maybe it will, and it doesn't matter. If it does, it does. I'm not going to be crying about NASDAQ anymore like I always do, because, it's just a trade, right? It's just a trade. Let's go back to the S&P and let's see if the S&P gave me a signal. Yeah, so S&P also gave me a signal. Let's see if we can do S&P. I'm short S&P here too. S&P kind of retracing a little bit against me, but they're both kind of retracing against the moving average, is trying to figure out if this is going to be a transition back to the up move or it's still going to maintain its down move. It doesn't matter what it does. I'm betting on the fact that generally it's going to maintain its trend. It can totally flip itself around and stop me out. And if it does, I will then look for signals to the upside to resolve myself, just like I resolved the S&P trade earlier to get myself back to positive when I found the signal to be proper. So the point is that, okay, so NASDAQ and S&P stop me out. Well, S&P does not stop me out yet. I'm still in the S&P trade, but it looks like it's going to stop me out. And it looks like they're going to, they may be turning around. That's fine. What's important is that this was a legitimate trade. It was a legitimate signal that absolutely was worth taking. And then we take the next signal and just work that. If we could just stick to the methodology, in the end, you are going to be very net positive on your position, right? NASDAQ, of course, is doing the let me stop you out and then go your way trade. That's fine. S&P also turns itself around, and now we wait very patiently to see if there's a legitimate next signal for us on this trade here. This may take another 5-10 minutes before something legitimate appears. Does it suck that this thing stops me out and goes to target? Yeah, it does, but that's just the nature of NASDAQ. It's going to do that. The settings that I have are 208 period SMA. Okay, I have a second sell signal in S&P, and I have 25 seconds left to see if this signal holds, and it may not, and that's why we wait, right? Because we're clearly having a tug of war between the bulls and the bears here around whether we're going to turn the indices around or whether the indices are just kind of topping out at the 200 SMA support. No signals, no trades. Oh, I like that. That should be our new motto. No signals, no trades. It's a good motto. The fundamental course is a lifetime access. Correct. You can have it for as long as you like. You have full access to it for as long as you like. All right, no signals, no trades, right? I think that's actually better than BFF. I mean, being focused is good, but no signals, no trades is a real rule set that we should adhere to. Waiting patiently here, hanging out with you. Oh, another cool thing I was going to tell you. It's another new thing that's coming up in Scalp World with Boris. I'm going to try and do it this week. I can't promise you. Maybe I'll do it on Wednesday. It depends on how busy Kate has me scheduled. But I really want to start doing once, maybe even twice a week, European session. European session is super simple to trade, especially for the kind of scalp trades we do, the 1-2 point, really nice continuity trades where you can really scalp them out. And a lot of people, in Asia can trade with me. A lot of people in Europe can trade with me because it's going to be the European Open. So it's really easy, to come in and trade. And not that many people actually trade live during the European Open on the indices. So I thought it was, be a really good fun thing to do. So we're definitely going to weave that in as part of the BK repertoire for us. Trading tomorrow is going to be fun. Tomorrow is election day in the U.S. It's going to be probably crazy. We'll do a little bit of scalping in the morning, and then I'm going to go vote, and then we'll see how if the world ends for all of us tomorrow. But it's definitely going to be very interesting. Yeah, you were smart. I mean, I took it because it was, it was a signal trade, but it was definitely, and the thing about it is, it would have made money. It would have been target. It just stopped me out. Like, NASDAQ will do that. That's why I don't really trade NASDAQ as much as the S&P, but I'm not afraid to trade it. It's just I like to put my efforts on the S&P where I have like a easier chance of trade here. Market's still trying to figure out that they're touching the long-term trend. They're trying to see if they want to go above long-term trend. Where's gold here for us? Gold now is back up above long-term trend, and what we like to see is it establish itself, give me a purple and a green, and then I'm ready to go, because then you have like nice separation and stuff like that. But we'll see if gold wants to hold its bid over here as far as it goes. Yeah, anyways, see, S&P trying to establish its first green signal here on the uptrend. Where's NASDAQ? NASDAQ kind of doing the same thing. We're trying to climb up and see if we can get any continuity to the upside here. But just to make you understand what's where the money is made. The money is made on distance and time, right? So the more time the price spends underneath the moving average or above the moving average, the likelier you are to make money. Because what that means is that there is some sort of even a mild trend going on, and you can capture this trend 2, 3, 4 times in a row, right? The less time, like if it goes up and down, up and down, up and down, if it's changing formats every 15, 20 seconds, that's not productive, and that's not going to be a good situation. Right now, we're still dominant sell trade. We're still underneath the moving average, right? This little green signal is just a tiny counter trend move here. So this red signal over here on the S&P will be a sell signal for me, because I'm going to take the assumption that it's a legitimate continuity of the trade to the downside. But I need the whole thing to complete itself into a red signal. Right now it's battling, and if it sort of unambiguously puts itself above the moving average, you got to go the other way, which is probably where I'm going to go. If I have 2 greens in a row here, that's a pretty strong signal to me that we have continuity to the upside. 13, 14 seconds. All right. I'm long at 63, targeting 64, 61 is my stop. A little bit, I bought it too high. I should have waited a little bit more. Should have executed better, but it is what it is. And I'm stopped out. because we're still putzing around over the moving average, not really establishing ourselves strongly. But now I'm getting a red signal, and I'm going to take it again. And you have to have conviction and strength. It might be 2-3 times before I finally resolve my trade. I'm a little bit larger. Now I have to have the red. I'm going to be very careful to make sure that it's truly a red signal here. So if it's not a red signal, I'm not trading it. Nope. Just got a bad execution. I got clipped out again on just a retrace trade here. So we're trying to reestablish a move here. If it stays green, I'll go again on a little bit larger size and try to reestablish my trade here. But this is our chop land special today, Monday chop land special. Notice that all the trend was before the market opened, and then you got really, really chopped into the market open, which is what I was trying to tell you guys, that the time that we're live trading, it's just simply convention that we're all trading live market open. It's actually the worst time to trade. The better time to trade is actually from like 7 until 9 in the morning, and then probably from 10:30 onward, when we get definitive directional moves. Like here, they love to just chop you out, and we do very often get chopped out in the early sessions, only then to make everything back in the later sessions. Today is just not a conducive trade, and it's probably a function of the election jitters and everything else, but also just choppy price action. Ultimately, it's just choppy price action that's killing us, and we just have to wait for it to give us some continuity. Who am I going to vote for? Well, I came from the former communist dictatorship of USSR. That is about as much clue as I'm going to give you. If you will probably notice that most people from communist countries like Cuba or Russia or Hungary or Poland have a very strong view about socialist governments. So you can guess who I'm going to be voting for from that point of view. And I fully, by the way, understand the other point of view. And it's not that I'm really not, as many people in this election, I'm really not voting for somebody. I'm really voting against somebody, it's a terrible situation to have. But I think that's just the election this year is really who you're voting against, not who you're voting for. So we're very slow, right? Not a lot of price action, just kind of yanking around. But we are finally establishing an uptrend in the indices. How's gold doing? So gold might be interesting. If gold gives us gold gave us a green-red trade. Gold, honestly, we should have just been trading gold. Gold has been a pure money machine on every trade we made. Indices have been just chop city. But it is what it is. You can't regret. Assassin mind. Oh, that's great. Dr. G just said he passed his prop test. Good for you. What? Tell us a little bit about the prop test while we're kind of watching. What size of the account was it? What were the rules? Like, how much up, how much down did you have to have? What instruments did you trade? Love to know. Give us a little bit of a preview of your stuff. Oh, man. CNBC producers are bothering me. Guess I was like, I'm so happy I don't have to do TV this week. And then, of course, I knew the politics are going to pull me in. All right, I'll be doing CNBC on Wednesday, guys. So we'll still might trade Europe, but we'll see. Just letting you guys know. That should be really interesting. Actually, it's going to be right after the election. Let's see how much of a cluster F that's going to be as far as the markets go. All right, I'm being very patient. There's nothing going on here. We are starting to create a pull away market here. So I'm just going to wait for the signals to come in, and then sorry, guys. Just give me a sec here. Okay. See, nice big pull away. Now, the thing about this is you can actually kind of see that the market is starting to rise. And if you were trading your feelings, you certainly could have, captured some of this move. But I'm trying to really just trade rule sets with you guys because one, it's, it keeps you grounded. And two, once you kind of move away from the rules, you're going to start doing too much improvisation. And that's just, it's going to get you out of control. So if this is going to be a true uptrend, there'll be a signal down, a signal up that's going to give us plenty of chances to make money here. Wow, 150K accounts. So here's some interesting stuff. So Bonax, okay, here's Dr. D is giving me some information on what he did here. So 50K account, ES and ES only, he hates NQ. I do too, my friend. I do too. So same deal as the Apex. 3K up, 25 down. That's the sweet spot. 150 account up, 66K needed, 9K target, 450. Yeah. I don't like trading the larger accounts. I like trading the 50 accounts these days because the risk reward ratios are really, really good on the 50K accounts. And and the discount is did Apex take away the discount? They may have taken away the discount, but if you don't have, you definitely have the 70% discount with us. If you use our savings, even if it's not 80, you're still going to get a massive discount from us. Okay, so be sure to take it. I haven't looked because I've been away. What the rules are, but regardless of what the Apex rules are, just using BK Save as a savings, you will definitely do well with it. Okay, here, I'm gonna put this up here. Just make sure you use BK Save as the code. So very, very slow. Nothing much going on here. I may have to go soon, unfortunately. The other cool thing about doing Europe is I'm so much freer from like 4 to 6 in the morning. Like we can totally chill and, not have to rush because I have like 1,000 meetings and everybody wants my ass for a whole sorts of different things. So I hope some of you will join me. I'm actually curious. Let's do this. We haven't done a poll all day long. Let's actually ask somebody. Let's do a poll. Would you attend my EU session, which is 0400 New York time? Yes or no? I'm going to start in. Give me some responses, guys. So I want to disabuse everybody of like all these rumors on Apex, at least from the experience of my traders in my room. The people who are complaining about not getting paid are totally breaking the rules. They're averaging in, they're doubling down, they're fucking, they're just trading 1,000 accounts blindly. They may be doing one big trade, like they're breaking the consistency rules. They're breaking every rule possible, and they're crying like a little bitch because they're not getting paid out because they're cheating. I mean, it's very easy to cheat. Apex is so lax on their rules, and they allow people to do so many different things that people abuse them all the time. And then because they abuse them, they then start crying around, oh, I'm not getting paid out. You don't deserve to be paid out. Everybody who's in my room who passed the Apex evals and then is trading, my strategy, no problems at all. They have zero problems with it because we're trading exactly the way they want you. Consistently, small profits, small targets, risk control, all the shit you need to do as a professional trader. So at least from my perspective right now, I have not heard of any, bogus reasons. Everybody who's getting rejected deserves to be rejected on Apex. Everybody getting paid. They're still getting paying out. I think they're like over $100 million in payouts. They're paying out more than $1 million a month, far more than any other firm in the business. So everybody loves to do FUD. Everybody loves to shit on Apex. But the real reason is that they're actually the leader. They're doing a great job as long as you follow their rules. So that's sort of my own personal opinion. Take it for what you want. It's just my own opinion. I certainly don't represent them, and I have no idea. Enzo, I'm laughing because it's I've been there, but it's funny and tragic. So Enzo, I got to read this comment. Enzo says, since joining just over 2 weeks ago, I passed Apex Challenge using your directions in mind. I then used only my style and blew the account up in a day. I then tried using only yours. That's funny. So yeah, I mean, I've been there. I steer away from my own style as well. It's very tempting for me to kind of chase the trades here, do all sorts of bullshit, and do all stuff. It's not productive. Again, watch the movie Knox Goes Away. Imagine yourself being in the assassin mindset, and I think you're going to feel much better about how you should be trading. What you should be doing as a trader, right? So again, what am I doing here? I'm not like, this was a double green over here that I just did not take. Why didn't I take this? Because as I told you, I'm happy to wait. I want to see the purple green transition. If I get a purple green move, I'll take that. That's a much stronger, better trade for me than trying to be the first at the rodeo. I'd rather be the third or the fourth of the rodeo because then I know the rodeo is for real. I know the trend is gonna, like right now, it's only been 15, 20 minutes of trend. If this is a good trend, it'll last for an hour. If it's a great trend, it will last for 3 hours, and we'll have like 4 or 5 trades to make in that trend, right? What we're trying to do, if you think about this visually, is just trade well in what I call the trend slice. It's like a pizza slice. I want the fattest pizza slice in the world, and you got to wait a little bit. Just for the slice to establish itself, and then you hope that the slice has continuation. That's really what we're doing. Visually, we're looking for that trend slice to establish itself and continue. And if we can do that, we're assured that the trades are going to be there, right? So now I get a second green triangle here. That might be a pretty decent trade here. 39 seconds left here. We'll see. We'll give it a shot. Today is clearly a torture day for all of us, but it's not. I'm not even moving the needle unless and until the green triangle completes on the candle. By the way, those of you who are going to be doing like MT4, MT5 challenges, I'm going to have a really cool tool set for you guys that will help you buy on the close of the candle right then and there. 2, 1. Okay, I'm long. Long this thing, 68.75 is my target. Let's see if we can get up there. Maybe not. We'll see. Now I see I was a little bit see, had I waited for the purple and for the next green, which now I'm gonna have to do, I'm going to have a much better trade. So I forced myself. I didn't want to take the double greens because I really wanted to wait for the purple and the greens, but I was like, okay, we got no time. I really want to take the trade. Didn't work. Now we're going to go one more time for the candy. If I get a green signal, if this goes all the way down to through the moving average, then I'm screwed. But you see today is just sort of a very chopped day with really tough retraces on me. When I'm gonna have to lick my wounds and maybe try a little bit later in the day. Sweetwater says he gets paid twice a month, like clockwork out of Apex. So that's testimonial from people who actually deal with them on a timely basis. That's all I can offer you. Not getting a green candle here, a green triangle here, unfortunately, so no trade. Another purple. If I get a purple green, I'm going to go long. Or if I get a green, period. But right now I have no signal, no trade. So sort of trying to understand why I like the purple green transition is because if you think about this, it's kind of like a retrace trade and trend, right? So you have a retrace and then you have a reestablishment of trend, which means you have lower levels, generally better positioning. You're not chasing to the top. You're not chasing the upmost move of the trend. And you have a decent amount of confidence that the trend has some continuity and kind of reestablishes itself. If you get all those signals, coming at you, like right now, we obviously don't have it. We obviously just have pretty much chop here, but the very fact that we have chop that holds above the moving average should be encouraging, hopefully, for building a base and a foundation for a little bit of a breakout as we go forward. I think markets just honestly don't have anything to do. Nobody really wants to commit capital ahead of the election. It's all just moving things 3 yards there in a cloud of dust, as we say in American football. Although here I am, I'm getting a green candle in the S&P. Excuse me, a green triangle in the S&P. Five seconds left. 3. Let's see if this holds. It does. All right, I'm long, and target is 96.50. Let's see if it does me right. No, just no continuity today at all. No driving. Yep, Nasdaq's going to come back and eat me here alive, probably. Another purple to the green. Yep, stops me out. Nasdaq just torturing me as always. S&P give me another purple, and then if I get a green, I will go. This will be my final trade with you guys. I'm sorry I've tortured you today with all these terrible slips, but that's what happens. Sometimes you just bleed out a little bit. And today is definitely a bleed out day, but we'll see how the end of the day goes. I may be able to recover most of this stuff and make it work. Just today, there was just absolutely no continuity trades that worked our way. I'm going to give it one more last shot. If I get a green move up on both sides, and then we'll see how it goes. What quote is funny? What was funny? I don't even know what I said. Well, guys, if we're going to have a crappy day, let it be Monday, right? I knew this was going to be a challenging week to start with because of election and discontinuity and everything else. But frankly, just no excuses. I mean, the setups just did not work. We had a purple green just did not work. Not a purple green here though. I mean, here was just me not taking the trades properly. The S&P has not given me the signal yet to really trade. Like if this goes green, that'll be the first legitimate signal that I have in the S&P. And gold actually was the one thing that worked continuously for us. Gold has actually slipped down to the negative zone for now, but there is no real signals here. And basically, it looks like this particular trend slice just simply kind of died, or it died at the top. And when it does that, what is that term in baseball when it like a fly ball, dying quail or something? The ball just dies on you. This is kind of like what we have over here. Not a lot of momentum, and so there are no real trades for us to take to the upside. As I said to you, there's literally not been a single legit long trade in the S&P. I just forced 2 trades because I was just trying to create some action for you guys. This NASDAQ trade was legitimately stopping out. So was this NASDAQ trade. Just stopped me out on retraces. I'm waiting for one last signal for us to see if anything works here. No signal so far. Pretty slow price action, huh? Ooh. 5 more minutes and then I got to go, whether we have a signal or not. No green triangle on NASDAQ because it's coming off a lower low. And, here's my point. Yes, you could have taken this candle. Would it, did it follow the rules? No. Is it sort of in the spirit of the rules? It kind of is, because you had a retrace and a recapture of the move. I didn't want to do it because I really want you to, I really don't want to take rule-based trades. But if I was myself, would I have taken this trade? Yes, I was thinking about taking this trade. I don't want to do too much improvisation here, even if it's like it would have worked, because the point here is just to show you the setup over and over and over again, and then you can use it to your best, to your best ability, because that's really what it's all about. It's about showing you the setups, and even if they don't work, it's better that you see the setups in action than try to improvise continuously on the trades. So yeah, you have to be a little bit more patient here. Anyways, I'm out of patience because I got to go. I have a meeting. Unfortunately, can't get the final trade to see if I can resolve this one. We'll start again tomorrow. We'll definitely do it again tomorrow, 9:15 or so. Tomorrow is election day, so that should be a lot of fun. We'll try to be as careful as possible, but this could be chop city for the next 2 days. Just trade small, as Anthony Crudele said. And I'll see you guys. I'll see you guys a little bit later. Everybody have a wonderful, wonderful day. I'll see you guys later. Oh, dust! 3 clouds and 3 yards in a cloud of dust. Yes, that's a very famous American saying. Yes. Everybody who plays American football understands that. Yeah. Cool. Thank you, guys. I see you guys tomorrow. Looks like we're starting to get a little bit negative here. So, maybe this whole up slice was all she wrote. We'll see. Everybody have a wonderful day. I'll see you guys. Tomorrow. Oh, and it looks like everybody wants to do the European session. So that's really, really nice to see. Super. I'll definitely be doing it, guys. I'll definitely put it into play. Everybody have a good night or good day. Enjoy. I'll see you guys later.